What you need to know about credit. Hi there, it's Luigi, and welcome to Catapult Capitalism, your guide in making smart financial moves for your future. What exactly is credit? How does it work? And why is it so essential? Knowing and understanding your credit is critical when making large purchases, like when you're buying a house or when you're funding a business. Your credit reputation is used to evaluate your qualification for pay-to-use services, such as a cell phone plan or an apartment rental. It's also used to calculate your credit card and loan interest rates. When considering you for a job, some employers may even utilize your credit report as a deciding factor. Let's take a look at how credit works. Before we start, if you like this kind of content, make sure you smash that like button, subscribe to the channel, and click the bell notification icon so you're notified whenever we upload a new video. Now, let's get to it. What does credit history mean? So, what exactly is credit history and how does it impact your credit score? Your credit score is based on your credit history and is part of your credit report. Your credit history is made up of all of your credit cards and loans you've ever had, dating all the way back to the first credit card you got. It's a record of how you've paid your bills in the past and how well you've paid them. And, as I previously stated, your credit score is a letter grade that creditors use to estimate how successfully you'll be able to pay your obligations in the future. Understanding credit scores. How exactly does credit function in terms of credit scores? Equifax, TransUnion, and Experian are three major credit bureaus in the United States. Their primary responsibility is to gather credit information from a variety of sources. They compile it into a report, give you a credit score based on their method, and make it accessible to credit agencies. You're given a credit score, which ranges from 300 to 900 points. They indicate how well you've managed your credit cards and loans in the past. These credit bureaus utilize four major credit scores. 1. FICO. The FICO score has been the most often used way of scoring. Payment history, debt owing, period of credit, new credit and inquiries, and forms of credit are all factors that go into calculating your FICO score. FICO scores are used by 90% of the leading lenders. The range of scores is 300 to 850. 2. Vantage score. The FICO score's major competitor is the Vantage score. The three major credit bureaus developed this credit rating technique. Payment history, credit usage, account size and characteristics, total balances, credit behavior, and accessible credit are all factors that go into calculating your Vantage score. The range of scores is 300 to 850. 3. Beacon score. The Equifax Credit Bureau developed Beacon score, trademarked and proprietary, which is used to evaluate and rank an individual's trustworthiness. The information used to calculate this score is based on credit information held by Equifax on a person. The range of scores is 280 to 850. 4. Empirica score. TransUnion, the credit bureau, created it. It's a score based on FICO that's exclusively given to lenders. Lenders are using the Empirica score to assess credit worthiness in the same way they use the Beacon score. The range of scores is 150 to 934. If you've made it this far and you're learning something, smash that like button, subscribe to our channel, and click the bell notification icon so you'll know whenever we upload a new video. Okay, let's move on. Now that you've learned the fundamentals, let's tackle the topic of what constitutes a good credit score. What is a good credit score? A good credit score is generally considered to be 720 or above. With a credit score like this, you will almost certainly be approved for a loan at the lowest feasible rate. Paying your bills on time is an important aspect of credit. It shows lenders that you are creditworthy, and this has a significant impact on your credit score. If you're behind on any payments, make every effort to catch up as quickly as possible. Make contact with your creditors to arrange payment plans and new payment dates. In addition, it's advisable to set up reminders for all of your bills so that you don't forget to pay them in the future. Create a budget that includes all of your recurrent expenses, including the dates on which they are due. Payments can be automated as well. Ways to improve your credit scores. Your current credit status is critical to improving your credit rating. What's your credit score then? Checking your credit is something you should do on a regular basis. Inquire about the accuracy of your credit history. Are you keeping up with all of your payments? Here's some of the ways you can improve your credit score. 1. Know your credit score. These questions should be easy for you to answer at any time. Before you apply for a loan, you will need to know how your credit is so that you can be sure that you can repay it. The more you know about your credit score and what's in your credit history, the more aware you'll be of credit fraud or identity theft. A good idea is to get a copy of your credit report. All in all, you want to make sure you know where you are with your credit right now. You need to know what the credit bureaus have learned about you, your payments, how much you owe, how many different types of accounts you have, and how many missed payments or delinquencies you've made. 2. Paying on time. As we said earlier, this is a must, and if you can't, be sure to talk to your creditors as quickly as possible to figure out what else you can do. 3. Maintain a lower total ratio of debt to credit. You can do this by making on-time monthly payments towards your debts. Your credit score is influenced by both the total amount of debt you have and the percentage of available credit you are using. An ideal debt-to-income ratio is below 0.4. Anything above that puts the borrower at more risk and makes it more difficult to secure a loan. 4. Don't close old accounts. So, how does credit function with relation to old accounts? Your credit card accounts are an important component of your credit history, so you'll want to maintain any accounts that indicate you've been repaying your debts on time consistently in your credit history. Keep open any accounts you've paid off and use them for little purchases every now and then. Each month, settle them off in full. Understanding how credit works will help you financially. Remember, now that you understand how credit works, to utilize it carefully and to your benefit. That implies you can use it to get a home loan, a cell phone, rent an apartment, or get business finance with it. With a solid business plan, of course. That's all for now. If you enjoyed this video, hit that like button, subscribe to the channel, and click the bell notification icon so you're updated when we upload new videos. Thanks for watching Catapult Capitalism, and I'll see you next time.